And I am a firm believer interest rate shouldn't be the determining factor on whether or not you buy a house.
Mhm.
It's a factor, but to sit around and wait for rates to come back down to what they were in 21 and 22 isn't going to happen.
Right.
And the longer you wait on rates, the higher the cost of the home is going to be. So you're negating the benefit of a lower interest rate.
Good morning. Today, my guest is Jonathan Robert. He's the branch manager for New American Funding in Birmingham, Alabama, specializing in custom mortgage solutions for first-time homebuyers, veterans, and clients seeking 100% financing. A former chef, he ranks as a top mortgage originator nationwide according to the Scotsman's Guide and has been recognized as a top lender for the Alabama Housing Finance Authority's Step Up program. Good morning and welcome to you, Jonathan.
Good morning. Thanks for having me on.
Okay, so one of the problems I have as a listing agent is I'll get a contract and they ask you to pay all the closing costs, and I'll talk my client into doing that, and then I'll estimate it at $6,000, maybe $8,000, and then it'll come in at 16.
Right.
And how is there a way? I mean, but that usually comes from these online VA loans.
Yeah.
Is what I've seen.
Yeah. I mean,
their costs are so high.
Well, and there's not a local person to know what your closing attorney fees are, to know the standards in the different areas. And I'll get on my soapbox about one thing that's always bothered me. I don't feel like realtors should do net sheets. I think you guys should be good at what you do. Let the people that handle the numbers do what they're good at and let us provide you the information. But yeah, I mean, so, a lot of times part of the pre-approval and pre-qualification process for us is to provide an itemized list. And you can call it a closing disclosure, a loan estimate, a HUD, a GFE, whatever you want to call it, an itemized list of fees that we can expect. And again, let's capture as many as we can. So if we know we're doing a septic tank inspection, if we know home warranties paid for by the buyer or the seller, like a lot of it comes to knowing how we're going to write the contract and working together to work through to get to that bottom line. Because being off on closing costs doesn't benefit anybody, buyer or seller, no matter who's paying them. So that upfront due diligence, and I can pull up, and I will say, as much as we hate, Zillow's good for me to access the county tax records sometimes, because some of these cities might sit on the edge of a county and it'll take me to the right county so I can pull tax records and it'll tell me if it's septic or sewer. So if it's septic, I'll generally include a septic tank inspection. I'll leave it up to you guys to decide if we don't need it, but I'll capture that fee up front and then know, are we splitting title and attorney? Are we in a market that traditionally does it? So when they come to you with this offer, it is a fairly concrete number. And again, we can't control things like homeowners insurance. If somebody wants to pick a homeowners insurance company that the cost is way high, or flood insurance wasn't anticipated, or whatever, we there will be changes on occasion. But nobody wants for those sellers to be hit with a big number because they're not going to pay it. I mean, you agree to $7,500 in closing costs and it's $16,000. I don't know a seller out there that's going to go, oh yeah, no worries, you didn't know, and keep moving. So yeah, but that's not exclusive to VA. That's really any loan. And I think we work really hard to dial in and be accurate on our loans. Escrow setups, how many months are we collecting for taxes and insurance, per diem, what day of the month we close on makes a difference, especially when you get in larger loan amounts. All those things fall into those criteria, those things that we have to deal with. And so, yeah, in my opinion, it's on the lender to try to get that as accurate as possible. So by the time you get a contract, there is a number, a tangible number that we feel with some degree of certainty that's going to be the actual closing costs. So yeah, and again, not just VA, but your point's very valid.
Right. Well, thank you. Okay, let's talk about the problem we have with self-employment solutions. What specific mortgage options exist to help self-employed buyers who face hurdles with traditional financing?
Well, speaking to somebody that probably knows the pain as well as anybody, when you're self-employed, you have that juggling act of claiming everything on your taxes to show the income and then paying way more in taxes than you should. So there's always that challenge. So we have a few different ways to do it. And again, programs mean a lot. So conventional, let's just kind of start with the traditional loan products, conventional FHA, all those. Tax returns is going to be your best bet, right? So, this time of year, we're a little outside of the window where it's like, hey, let's get your 24 tax returns, see to make sure what you're claiming on your 25 taxes wouldn't be sufficient to be able to do a traditional loan product. And we do that a lot. So we look at a lot of tax returns to start with. We don't just assume because you're self-employed, you don't report enough income, because there's, deductions, there's depreciation, there's mileage, there's all these things that factor in. So we always want to start with the tax returns because it gives us the biggest range of products that they can use. If that doesn't work, then what are we left with? So bank statements is a really popular loan type. So we can look 12 to 24 months bank statements. And one thing I tell everybody that's not talked about is depending on the business type, we don't just look at deposits. We don't just go, okay, you've got, you know, $17,000 coming in, so we're going to give you $17,000 of credit for income. Depending on the program, they may basically deduct or divide that by a certain number, especially if you work in an industry where there's goods being bought and sold. So gas stations, which is really common. We've helped several gas station owners, and we use bank statements on a business side. They'll cut your income by 50% because they know you have to buy products. So there's a lot more to it than that. So bank statements are a really popular product, and it's one that really doesn't penalize you a ton in ways some of the other loan types do. Because then once you get out of the bank statements, excuse me, then you're getting into what's considered non-traditional or non-QM loans. And they allow some broader guidelines or maybe a little more lenient with tax returns, profit and loss statements, other things. But for us, really, careful financial analysis of tax returns to ensure that if that's the best option and one that can work, we do that first. And then we start to get into some of these other programs, which bank statements probably the most common. But I'll tell you too, it's not uncommon to if you're doing your due diligence, does a cosigner make sense, especially with some of these younger self-employed borrowers that might be, and when you say self-employed, we don't just limit this to self-employed. A lot of times it's anybody that gets a 1099. So it could be Uber drivers, it could be DoorDash, it could be gig is the way they refer to it, gig jobs where you're doing something and your job's not taxed. So we try to be careful in not grouping self-employed separately from anybody that works a job that's not taxed. So if you don't get a W-2, you fall in this category. And so a lot of times we get these mid 20-year-old buyers that have this non-traditional income. And I will say, it's all content creators. I mean, you're seeing more and more people that make a living off of YouTube videos and TikTok, and they generate revenue by engagement and stuff, which we talked about earlier. And the way they do it, that tends to be a younger generation. Well, a lot of times, if you ask the right questions, their parents may be willing to step in and help. They may co-sign. There may be another way to do it. So what's more important than having this broad portfolio of products, we're just like, okay, 15% down, higher interest rate, we'll make it work. Let's make sure we're being really diligent on the front end to make sure that we're not just omitting you because you're self-employed, because you're a 1099 borrower. Because tax returns can be really daunting. They can be really scary. And I know a lot of lenders, they'll just default. So if I have a client, and I have one, they own 5 gas stations. So it's 5 separate parts of the tax returns and they're all interconnected. Well, a lot of times lenders will just be like, let's just do bank statements. It's easier, it's less documentation. But yeah, you're also higher down payment. Sometimes there's more fees. Sometimes it's a higher interest rate. So let's not just assume because you're self-employed or you're 1099 that we have to use these other programs. We've worked closely with CPAs when it comes around tax time. Maybe they're just a little ways off. And maybe if they just claimed a few more things on their taxes, maybe if they itemized a few more things, and we're not being sketchy or sneaky, but we're getting those calculations more in line to where they can qualify the more traditional routes. So for me, a lot of it comes down to just working with somebody that's willing to take the extra steps to ensure that we're getting the best product out there and not just the easiest.
Mm-hmm.
So yeah, I mean, there's a lot that goes into that.
Yeah. How can real estate agents best collaborate with you early on to ensure their entrepreneurial clients have a smooth closing?
Well, it gets to, I think we've talked about through the whole process, it's a communication aspect. So I think the biggest challenge for a really good experienced real estate agent is to not step into that lender role on the front end and ask those questions. And, you're a gas station owner, we probably need to do a bank statement loan for you because the last 2 I did it that way. A lot of it comes down to, I think, if the communication with us, and I'm going to use us as an example, and you trust me, you put in me the faith that I know how to get us from point A to point B, and give me the time on the front end. So especially self-employed or entrepreneurs, which is a good word, it's really hard for you to call me on a Saturday night and say, I need a pre-approval letter on this buyer that hasn't done an application yet. So setting the expectations up front with them, hey, it's a little more complicated deal. I'm not saying you're going to do one of these programs where you have to have a giant down payment, but there's more paperwork. We actually communicate closely with CPAs and tax preparers throughout the process, because this time of year we have to get profit and loss statements, we have to get ledgers, balance sheets. So it's really setting the expectation for the homeowner up front that, hey, I know you own the shop down the street, Jasper. How many boutiques and different shops are on Main Street there where they're independent business owners, and they may come to you and be like, hey, I'm ready to buy a house. What do I need to do? And the first thing a lot of times I think you should say, is opposed to go and look at 5 houses this weekend so you fall in love with one, get your documentation together, have a consultation with my lender, go through what it is we need to get you pre-approved. So it's even more important than somebody say that's salaried or fixed income or even hourly, where a lot of times you give me a couple days, I'll have them ready. You get me on a Thursday, by Saturday, you can probably be looking at houses. With the self-employed or the entrepreneur buyers or just the 1099 buyers, setting the expectation of, I've done this with my lender a bunch of times. He's going to take a bit longer. So it's not going to be that quick online blanket pre-approval. And he's going to ask you for stuff. And if you have a complicated tax return, likely we're going to want to engage your CPA so they can send those documents directly to them, because I don't need 85 cell phone pictures of your tax returns.
Oh, yeah.
That gets really complicated. So there's ways for us to collaborate, and for you to know, like I said, to have the basics of, I'm not just going to immediately ask you for 12 months bank statements. We're going to do our due diligence and make sure we look at those tax returns on the front end. If they don't work, we'll know. But that, to me, that's the biggest difference, is having that relationship with your realtor and your lender, that they trust that you're going to do the due diligence and the process that's appropriate to the buyer in a timely manner, without you having to come to me and be like, hey, I sent you somebody 2 weeks ago and I know they're self-employed, but they haven't heard from you. And where are we? And me giving you, whatever excuse, because sometimes it takes a bit longer. So that communication is really important, and just making sure we set the expectation. And I hate to put it this way, but I'm a worst case scenario kind of person. So if I talk to you about something, I'm not selling you on the best. Oh, we're going to have a $500,000 house with a 5% interest rate and it's going to close in 2 weeks. Let's be prepared for the worst. And if I over deliver, it's awesome, because that last experience kind of sets the tone for everything else. And it's even more important with self-employed buyers that we set that we're going to need some paperwork from you. We're going to need to do some documentation. I can't tell you how many loans I've done for real estate agents over the years that have done this for a living. And when we get into it, they're like, really? You need this? I'm like, yeah, like, you just have money coming and going all day long, because as a real estate agent, I think those checks come in, half of them go out for the next property and your marketing and your fees and your dues and your E&O and everything else. There's a lot that goes into it. And heaven forbid we don't do that on the front end, or we don't set that expectation up front, and it's a bad experience for those buyers. So the long way to get to your question, really, it's just the expectation setting and the communication on the front end to let them know. It's just like, they know they're not going to go to hnrblock.com and fill out a 1040 EZ form in 10 minutes and file their taxes. They're pulling receipts, they're pulling documents. And it's the same thing for us. If you have big cash deposits, we got to prove them. So if you go sell something, buy something, do something, track that stuff, keep records, keep good records. And if you set that expectation on the front end, and again, and I hate to say it this way, because the better a real estate agent is, the more knowledge they have of the loan process. But I have a lot of experience and a lot of occurrences where a realtor will come in and say, hey, you know what? We're going to need to do this program for them. This is what they qualify for. This is what we do. Yeah, probably. But let me be good at my job. I'm not going to tell you what your price per square foot is on the house. So have the faith in me that I can do it. And I want to take that off your plate, because that's a big part of it, is I don't want you to worry about that. I really don't want you to worry about a net sheet. So yeah, let the lender ask the hard questions and do the hard part, so you're not always the taskmaster or the mom cracking the whip to get the bank statements. We want to take that pressure off, but it helps to have that handoff and that expectation set by the realtor on the front end. So that was probably the 5-minute answer to a 2-minute question, but that's really how I feel about that kind of process.
Yeah, well, no, that's a wonderful answer, and I thank you for that.
Yeah.
Okay, let's talk about future vision and advice. Looking ahead at the local real estate landscape, what trends give you the most confidence for buyers over the next few years?
What trends? So I've already seen the question, so you'd think I have a prepared answer, but I thought about this one for a long time. There's a couple that I think there's a lot of optimism to. And there's a couple that I think that I don't know how it's going to end up. One is I'm seeing houses being built because, inventory is our biggest problem. And I feel that we are starting to move into markets and build houses in areas that aren't quite so far away as they used to be. And as we bring industry in and we bring all these manufacturers in and they're building houses in areas close to where they work, I think the housing supply hopefully will continue to get better because the past several years, supply has been the hard part. And that's not my side to talk intelligently on, that's your side. But that is one trend I'm seeing is I'm seeing more affordable houses being built. And I'm seeing where people realize not everybody can afford a $400,000 house. So we've got to adjust the market to meet those expectations. That's one thing. I'm really encouraged by that. Another thing that I'm seeing and I'm encouraged by is I do believe typically, and I'm going to use my daughter as an example, I think our buyers are savvier than we were at that age. I think I'm seeing a lot more financial responsibility from first time home buyers. I'm seeing some investing. I'm seeing some people maximizing 401k. I'm seeing buyers that come in better prepared than we did. At my age, when I was my daughter's age, my credit was terrible. Nobody mentored me on anything. Nobody taught me anything. And I think that we're seeing a lot of our buyers come in better prepared. And some of it may just be, bank statements are online, so it's easier to access your bank statements. They track their finances minute by minute with their phone, so they're more aware of what comes and goes. But I'm really encouraged by the preparedness that I'm seeing. And I will tell you, you and I aren't that far apart in age when we're talking about some of these first time home buyers. A lot of these younger buyers come in much better prepared than my older buyers because of just the access they have and the preparation they received. And my daughter listens to financial podcasts in the car. Like, I don't listen to financial podcasts in the car. So I'm really encouraged that I think a lot of our next generation of home buyers are coming in and are better prepared to go through the process than we were. So that means a lot.
I was going to say the information age has helped with that, don't you think?
Completely, completely. And that's where I was going to go is whether you like it or not, AI is here. And AI is becoming a bigger part of my business, and as I'm sure it is of yours. And it's not just making flyers and social media posts, but we're seeing where AI is stepping in our industry and being able to analyze complex documents, being able to pull important things out of contracts that may have been missed before. So we're seeing a streamlining of process. What may take me an hour to consolidate bank statements or pay stubs and put together documents is now taking 4 or 5 minutes. We still have to verify and make sure it's accurate. But those things that I'm seeing to me all point in a positive direction. And I'm not even going to speak to economy. I'm not going to speak to interest rates. I'm not going to speak to that because just when you think you know what's happening, it goes out the window.
Yeah.
And I am a firm believer interest rates shouldn't be the determining factor on whether or not you buy a house. It's a factor, but to sit around and wait for rates to come back down to what they were in 21 and 22 isn't going to happen.
Right.
And the longer you wait on rates, the higher the cost of the home is going to be. So you're negating the benefit of a lower interest rate. So I don't even have that conversation of, the new Fed chair is talking. It's not rosy, is this new Fed chair talking about what we can expect for rates the next couple of years. So I'm not going to sit here and say, gosh, we're going to be back in the low fours this time next year and the housing market is going to be red hot and all this, that, and the other. What I think is more encouraging is you've got a lot more experienced lenders and realtors because you've eliminated the ones that haven't been successful and weathered the storm. So the people you work with tend to be more experienced and better. You have a lot less fallout. You have a lot less deals falling apart at the table. You have a lot less realtors struggling with writing a good contract and representing buyers and sellers well. So you've consolidated the pool when it comes to the people in the industry that are doing the job. And that's a benefit. So I really think, regardless of the economic impact, the housing market's heading in a positive direction, but maybe not for the reasons that people talk about. Again, savvy buyers, you're having more engaged buyers, you have more experienced realtors and lenders facilitating the transaction so you have fewer problems. I think you have builders and developers realizing you need to build more affordable houses and less $1 million houses in this market. So you're padding an inventory that's already a bit shy so people can continue to buy. And if you put all those things together, I think the rest of this stuff's kind of something we'll deal with forever. But I'm really encouraged about what I see coming down the road.
Yeah. If we can just keep builders, I have a client who's a builder and he thought he knew everything and it was his first time really to build. but he's a financial guy.
Mhm.
So he built these beautiful homes thinking that they're going to be just perfect and everybody's going to want them. They're real modern. And then he took away the common aspects and made it a little higher end. And so now his
Mhm.
homes came in at $300
Golly.
square foot. And
That's a nice house.
yeah, yeah. And then nobody can afford it.
Yep.
The people that he was trying to sell to, or he thought he would sell to, the younger clients wanting
Mhm.
more modern, clean home, can't afford it because it's closer
That's
to $1
right.
million. And I mean, everything I've read lately, the data proves that's where the new construction is. So I'm trying to talk a few clients into, look, I know you're wanting to sell and I know you're wanting
Mhm.
to build, but in a year from now, if our costs now are $300 per square foot for the
Yeah.
type of home you're going to want, because you're, in your 50s or 60s and you're going to
Mhm.
want these certain finishes, by next year, it may be even higher. You can't,
Absolutely.
so look now, while the interest
Yeah.
rates are where they are and while building prices are at 300 instead of 350.
That's right.
So,
Well, and
uh,
again, ties into waiting for the rates to come down. But I think it's such a delicate balance because I
mhm,
talk to people every day. They're like, I'm not giving up my 3% interest rate.
right.
I've outgrown the house. I've got 3 kids in one bedroom. My dog cat doesn't have a backyard to go into, but I can't give up the interest rate. They're hurting themselves. And I'm not here to say, oh, 4% higher and your interest rate's not a big deal. It is, but there's reasons to move. There's reasons to buy a home, and there always will be. I think that being able to provide housing that fits the needs and not just housing that looks great on the internet or housing that I would love $1 million house that I would walk HGTV through and show all the beautiful finishes to.
Mhm.
I don't want the payment. I like a
Yeah.
comfortable home that fits my needs. And I think that's more and more of our buyers, especially when you're factoring in location, you're factoring in commutes, you're factoring in all these other things. Not everybody's willing to buy a $700,000 house an hour outside of town.
Right.
And you're seeing a lot of people come in from out of state. And I guess that's something I should have mentioned earlier is we're seeing a lot of these transplants from these other states. Our property taxes are so much less. Our cost of living is so good. Our insurance is less that the higher interest rate's a non-factor because they're actually cheaper because everything else is so much cheaper. And I think that's going to continue. I
Yeah.
think we're going to continue to see people move from other states, whether for work or whatever, and they get here and realize property taxes aren't $16,000 a year.
Right.
They realize they don't have to have a $10,000 a year homeowners insurance policy. Well, you
Right.
know what? And their house is half as much. The rate's a much smaller factor to those people. And again, I mean, Alabama's a great spot for that. We're one of the states that continues to grow in population because of a lot of that. So that would be, I guess, the fourth thing that I should have mentioned as far as encouraging trends is
Mhm.
we're a really affordable state to live in,
Mhm.
and people come here and can't believe the cost of living, can't believe all these other things. And so, I mean, as long as we can provide the affordable housing, and I love when builders build houses that fit that spot.
Mhm.
It's something below $300,000 or $400,000, and it may not have wide plank, solid oak, hardwood flooring. You may have to settle for something, but it's an affordable home, but it's a nice home in a good neighborhood. We'll
Mhm.
continue to sell houses. We'll continue to have buyers. We always will.
Right.
It's inventory, I think, dictates a lot of that. And if houses keep going up in price, it's going to make things hard to do.
Right. That's right. What is your ultimate piece of advice for someone feeling overwhelmed by the financial side of buying a home right now?
So we've talked about it a couple of times, really having that trusted advisor. And it starts with the realtor, but getting paired up with a lender that they can have a relationship with and can ask questions to and walk them through the process. So I don't ever want to be thought as, the Wizard of Oz behind the curtain. We make magic happen and you wouldn't possibly understand. It's too complicated. It's really not. And so those first two phone calls for me are probably the most important part of the whole process leading up to closing because we're able to set expectations. We're able to kind of feel because everybody communicates differently and what's important to everybody is different even between spouses. So it's really important to know, are you somebody that prefers to text? Are you somebody that likes to have documentation and records of things? Are you somebody that wants physical printouts? Like, to kind of know your comfort level and where you are is important to us because that's how we want to communicate with you. What I don't want to do is be overly technical to somebody that doesn't want it. So that website I referred to, the mortgage coach website, we're able to provide information that's dynamic. We can actually on the call change things, change numbers and stuff, because we ultimately want to boil it down to, and this is, my wife was a teacher for a long time, and she taught me some of my most important people skills, which is crazy to say. you want people to have choice. You want people to have options. And what I don't want to do is go to a client and say, you're getting a conventional loan, 5% down, 6.5% interest. Here's your payment. This is what you're doing. Go get a house. What I'd much prefer to do is give them some options that they can pick. All the options are going to be feasible, but to give people some sense of control through a process like this, which a lot of times they feel like they don't have any, because so much of the home buying process in those 30 days from contract to close is them waiting around for a phone call. They have no control over the process. They're at the mercy of other people. So to be able to give people some comfort and understanding what's going on and make sure that they have the ability to dictate what's best for them is, to me, probably the biggest thing to ensure when they get to that closing, they don't feel like they were just pushed through the process and they're just a transaction. So it's getting that right lender. And not every lender is going to be right for every client. I mean, I'll tell people, like, you know, some engineers are notorious. I'm sure you worked
Yeah.
with engineers. They're super analytical and stuff. And sometimes I'm a little too conversational for them. They want facts, they want numbers more so than attorneys and doctors and anybody. And so, finding the right lender to give them that sense of comfort and that sense of security, and knowing I'm not a 9 to 5 banker. I am not a clock out at 4:30, leave a message, I'll call you back tomorrow kind of lender. People don't buy houses 9 to 5, Monday through Friday. So having a lender that's accessible when you get that loan package for your first loan and it's 85 pages of documentation and it's overwhelming and you don't know what to do, you need to have somebody that you can call at night after dinner and be able to walk you through those loans and those documents and reassure you and kind of explain things to you. So if you don't have that, I really feel it makes for a much less pleasant experience. And so that's my best advice: is find somebody that you can get that comfort level with. You don't want to be you don't want to be pushed through the process. You want to be part
Right.
of the process. And to me, that's the
Right.
biggest.
Yeah, you don't want to feel like you're pushing a rope to get to closing.
No, absolutely.
Well, Jonathan, it has been wonderful to be educated by you today. Thank you.
Absolutely.
Thanks for spending some time with me today. This is No Excuses with Deanna Parrish. Be sure to tune in to the next episode for more real estate insights right here in Jasper and across Alabama.